When Palantir began, people believed that data was worthless, that software was a luxury item, and that we would fail. This industry is in its infancy. What's also very special about this industry is it really is, by and large, geographically located in a small section of America, which is odd, and there's lots of interesting reasons for that, but enterprise software is something that America is by far the best at. What we see currently at Palantir, it's not just the best at building it, it seems to also be the best at understanding what software developments are relevant for the world today, and adapting even when it's being offered by a company that in every way looks non-standard, run by people that are very different, look different, feel different, talk differently, and with a CEO that many view as batshit crazy. And of course, our legal department and IR department, which are wonderful departments, have a cane ready to pull me out if I'm not like a caged animal in the 1950s zoo. But as I've mentioned to them, if you want caged animals in the 1950s zoo, you can watch any other earnings update. Is our journey, and what I actually believe this is a metaphor for the journey of all software companies. We were very early into whatever you want to call data exploration, building things that that would now be understood as useful software for building analytic tools. Some of them were and are very, very important for national security and other areas. And what you see is from inception of Foundry, the decline of older software products and just the massive exponential growth. Obviously, it's rough math, it's 100% growth year on year. And then starting last year, not off of a small integral, which is obviously very important because small numbers can grow quickly even if the software is not strong. Big numbers don't grow quickly if the software doesn't exist, especially given that our sales force is super nascent. We're building it quickly, but we only have 25 fully accredited software. Fully accredited meaning they've been here for 9 months or more. And what you see here, obviously the CAGR here is just unbelievable, and in the 150 plus range, which is super interesting. And I wanted to drop the F-bomb here, but I was told that was probably inappropriate. But you could definitely, we've agreed that this is something like the Phoenix rises. Really, as far as I know, we are the only software company in the world building transformational software this far in. And that's particularly important because most software companies have distribution or they have a product, but they don't have distribution, product, and ability to build new products, which is not a critique. These are great companies. They acquire companies. There are not that many companies to acquire, which is why even relatively weak companies get acquired at a very high price. Over 200% CAGR here, which is also like Phoenix rises kind of thing. But what's qualitatively particularly important and very protective is this graphs pretty neatly onto what are the programs that are going to grow tomorrow. Where's the future of USG? What do we need in a world where people are recognizing it's very dangerous? And what would the products be that you would need to power that? My understanding of how this happens at other companies is like 8 people running around begging the person to expand their deployment. That's not happening at Palantir. The salesperson there is the Foundry product by and large. So obviously that means we think we can get lift from hiring salespeople. We're doing that aggressively. I think we have about 150 salespeople now. We're in the market to hire aggressively across Palantir. Honestly, mostly not salespeople because we believe we live and die based on our ability to build products of tomorrow, deliver today. But we're going to hire in the range of 200 people. Hiring and getting value out of them are two different things. And so I think one of the things that we will see going forward is how do we play these salespeople so that we can get as much lift from them as we're getting from the product itself. And we're at the beginning of that. To the extent we get this to work, you could expect even higher growth than what we have, although I'm very happy with it. Was like we've doubled USG, US commercial now, from 50 to 100, 100, 200. I believe we will double it again this year. The positive of US Gov is it's reliable, the sums are big, the quality of the revenue is very high. Essentially, there are a number of problems, but biggest problem is barrier to entry, which we've clearly solved, and then re-barriers to entry, which we've solved or are solving, but that's going very well. And then the second one is lumpiness. Now, that lumpiness still exists, and actually, in some ways, it's worse because to get the integral to grow, you need these massive deals. We also have small deals, but de facto, we are on the biggest, most important parts of the U.S. government, or software is. So there's really a twofold answer to your question. One, what will happen this year? Is a deceleration an actual one over a long time series? The answer is clearly no. But then the question is, if the baseline is 30, how does it get to where we want it, which was like the beginning of last year and not at the end of last year? And the way that happens is the deals were already positioned to win actually close. If you just look at that chart I showed you with the CAGR on Foundry, these are the most important programs for a dangerous world. Now, can't go into all the details, but you know, we used to debate with people, especially my academic friends, if the world was dangerous. The danger of the world being clear and present to the U.S. government is very protective. It doesn't guarantee that, you know, when this integral actually, how it behaves, but it makes it much more likely that it will happen in year and positively affect our revenue, which is another reason why I suspect that we will do well. There's stock-based comp and there's dilution. The dilution thing, that's a red herring. We're not issuing a lot of new shares. I think it's like in the $9 million range. And so it would be a little coy of me to say that's like no issue, move on. The thing to understand about Palantir, and then I want to just hit this, is like it's actually not the result of the DPO. It's the result of the fact that we were completely focused on building product. We had no earthly idea we were going to DPO till like right before we did it. And so most companies are, I mean, quite frankly, built so that you know, when analysts look at it, the primary customer of most software companies is not the client, it's the software analyst. So it's like we obviously, our primary client are our clients, which doesn't mean, you know, now we're thinking about how do we expose the data in a way that, you know, people on the outside like you and professional analysts and others can look at the data and get a better sense of what's tracking and what's not tracking. But the primary source of a lot of these like questions really comes down to, look, we built the company to support the U.S. warfighter primarily, and then dual use it for the glory of humanity, particularly humanity in the West. That was our idea. And because our primary client was not what you know, someone at a hedge fund would think, we didn't actually think of these things from inception. And so now there's a process of normalization. You're going to see that in going forward on these calls. It's like, how do you normalize? How do you provide data that people can look at? How do you provide data that people can understand, that they're used to seeing, while simultaneously staying true to what our mission is? It's like our primary clients are the people we're serving. We're in full line with them, and that's why we survive. Even with the nascent sales force, you can get things to double, which is insane. So then you get to stock-based comp, which is like, okay, so there's two parts of it. Of course, IRI people kind of don't want me to do any kind of forward-looking math, but you know, if you're smart enough to invest in Palantir, you're smart enough to figure out there's essentially there's the how are we comping people, and there will be a normalization that will get us into a range where you would see in a software company within the next 18 months, latest 2 years. But there's essentially, and that's going to take a little time. It is going to happen because it's also very much linked to another question, which is how do you actually run the company so it's profitable someday on a GAAP basis, not stripping out comp, and that is also within eyesight. And those are goals for Palantir, because same reason we have no debt, same reason we have $2.3 billion on our balance sheet. This is a company built for bad times. Bad times mean strong finances internally, and that means at some point you have to be GAAP profitable. You can't be GAAP profitable if you're diluting people, or your stock-based comp is totally is not in conformity with other companies. So you're seeing a normalization. This will change. It will change in the relatively near future. It'll be linked to other things that we believe are important for Palantir, like having a company that thrives in bad times. And we are, you know, bad times are very good for Palantir because we build products that are robust, that are built for danger, and then the finances internally are actually built for bad times. And bad times means you have free cash flow. The free cash flow turns into GAAP profit. That means the stock-based comp has to be one that's aligned with our investors. Also because that's basically, you know, it's part of a little bit longer philosophical narrative, but like if software is the only moat, then value and growth shares have to be evaluated in terms of their value. Value only exists if you can actually get a tech moat, call it, maybe it's something besides, and growth only exists if you build a company that is where the technology is strong enough the business fundamentals are strong enough that the free cash flow actually turns into GAAP profitability, and that's linked to stock-based compensation. So this is a priority both because you care, but also, quite frankly, because it is the health of our company, which we care a lot about. So actually, to my perspective, they're very much linked. Our primary investment in growth is investment in product, and we're doing a number of things in product massively valuable, and we're working on very, very large deals where companies are like, look, we want to transform what we're doing or take what we're doing and export it to every company in our industry tomorrow. De facto, that's a founder use case, and I don't think there's anything else that does that. The talent we're getting now is the best in the world. It's the best we've ever gotten, and we're getting people who used to be at Palantir. Everyone knows how good our people who are coming back. No company of our pedigree gets people coming back. And the reason they're coming back is because this is just cool. It's like you do this, you change the world. Where this is particularly valuable is you have a business that is not protected by a moat, but has real insights on how to do something and wants to take over their industry. So it's like you're sitting there, you have a product that is maybe the best in the world, maybe the second best in the world, but it's not protected. But you do have insights that are for software you could take over your market. And that's where we're seeing the pilot phases now are like days, and we're working on 2 or 3 of these now. It's very, very exciting. If you want people who are valuable now to be valuable tomorrow, they must be able to interact with the software platform. So that's like one of the reasons we've had a lot of adoption. Getting Europe to track better, both from a handoff of what happens in America to Europe and with more conventional sales approach is kind of what we're looking at getting done this year and see the fruits of it next year. Europe in general has grew slower, and that's if you assume that comes back online, it's just going to be bombastic. And I can tell you why, while at Palantir we are very, very focused on our business, and bad times are very super motivational for us. And when we get to good times, we'll be even stronger. And we're a little bit of a wacky group of guerrilla warfighters, but we're very much in fighting mode. And not just for us and the West, but also for our shareholders. And yeah, hope to talk to you soon.